Hello, hello, it's Walter here, and you are here at the Naked Trading webinar. Today we're going to talk about, it's a simple idea, but it's a tricky one. And it actually took me a long time, several years of trying to figure out how to test these little suckers. So what I'm going to do is I'm going to show you today a very simple but powerful naked trading strategy that you can use when the market prints what's called an inside candle. You've probably heard a lot about inside candles if you've been a student of price action, but if you're like me, you found them to be very confusing and very difficult to deal with. So what I'm going to do is I'm going to show you a special case scenario of using this particular pattern, how it works, and how it differs from a different pattern when the market goes in a totally different direction. So there's really, as with any sort of, hey, Pan, how are you doing? Great to see you here. As with any sort of system, you kind of have, with naked trading, basically, let me show you how it works. Okay. And actually, I'll give you an example. So with naked trading, how it works is when the so here's a trade that I'm in right now, right? So this is the Euro Aussie weekly chart, and my stop's down at 1.4315. I bought at 1.4817, targeting 1.5170, 1.5450. Okay. Now, this is what happened. The market went to this zone right here, which is this blue line at 1.4714 is where I drew it. Now, the actual line doesn't really matter. I could have drawn it at 1.4740. I could have drawn it down here at 1.4680 or whatever, but, I drew it around 14, right? And the reason I drew it there is because repeatedly the market found resistance, support, and resistance at this level. And if you're confused about that, the line chart kind of will bring that into focus for you. Now, if you think about it, when the market gets to one of these spots where the market remembers what happens there, it has a simple choice to make. Am I going to go through this level? Doesn't matter if it's going up or down. Is it going to go blast above the level and break resistance? Or is it going to fall through the level and break support? That's the question, right? And the answer often lies in the particular pattern that the market makes. Now, I had determined basically earlier this week that this looked like a breakout pattern. Now, might the market fall down and take my stop out? It might. But I believe that the odds are firmly in my favor in this case, where it's likely that it's to blast higher and it's much more likely to hit 1.5170 before it's going to hit 1.4315. All right, and it's only up 70 pips now, or 62, 3 pips or something like that at this stage. It's been a little bit higher than that, but that's so. The reason I bring up this example is not because it has anything to do with the trading setup that we're going to talk about today, but rather because it shows you this idea that when the market gets to a support and resistance level, it's either going to break through, right, or it's going to reverse. Now, this is an example of an engulfing candle, a special case engulfing candle I call a bullish big shadow. I know a lot of you, if you've read the book Naked Forex that I wrote, you probably know all about this one, right? It's in the book, but the important thing is that the pattern suggested a breakout and an upward movement. And that's very different to this pattern over here, which is the Aussie Kiwi weekly. This suggested instead a bearish setup, and this was a sell at 1125, or about 60. It's about 60 pips from where it is right now. Up at 1125, it's at 110.60 now. So that suggested a sell here. This is what's called a pseudo kangaroo tail. It's not quite a kangaroo tail, and I'm banking that's going to go to 108.50 before it hits 114.30, which is where my stop is. Again, this is Aussie Kiwi weekly. So this is an example where the market went to a support and resistance level, and instead, the likely scenario to me, according to the pattern, was that it would fall rather than break through. Now, what I'm I'm going to show you today is a very, very tricky pattern. And I kind of don't like talking about it because the nuances are so tricky. But I think I've boiled it down to some really simple rules that should hopefully help you so that when you see this, it makes sense. And so that when you see this, you think, oh, okay, yeah, let me go ahead and um, let me go ahead and try this. Let me see if I can test this and see if I can make it work. So if you have a particular um, chart that you would like to take a look at, please type it in the chat box. I'm going to take a sip of tea here. I'm still kind of recovering my voice from being sick for 2 weeks, but I feel like it's like 90% there today. So I'm feeling really good for this webinar. I'm glad that you made the time to be here. And if those of you watching the recording, I'm glad that you're able to sit down and spend, 45, 50 minutes of your time watching this, and I hope that you get something good out of it that you can test. So which charts would you like to see in terms of looking at an example of this setup? Any charts that you guys want? CAD. Okay, you got it. CAD it is. The Looney is the winner. All right, Tico, let's take a look at your CAD. All right, now what I'm going to do is I'm going to scroll back, not because I want hindsight or anything like that, because I just want to find one of these. They're a little bit rare. And let's see. No, there is not one there. There is not one there. No. No. It's kind of involved, so I want to make sure that we get a really solid example so that everyone can clearly see what I'm talking about here. And let's see. Maybe I'll go to the 4-hour. That might be better. It'll kind of increase my odds of finding one, most likely. This is actually a really good one. And it actually has sort of two setups in one, but I'm not going to talk about the other one because I don't want to confuse the issue. So let's take, no, that one doesn't qualify. Actually, sorry, I lied. That one does not fit the rules. Well, what about this one? Yeah, this one's interesting. High is 2246 and the high here. They're actually equal highs, so that one doesn't work either, which is unfortunate because that would have been a really good one. Let's see here if we can find another one. Boy, when you look for them, they do not. One of the reasons why it's so tricky is they're a 3-candle formation. So it's kind of you're not just looking at 1 or 2 candles. You're kind of looking for 3 particular candles. So that's why it's so tricky. Hey Joe, great to have you here, buddy. Yeah, I'm feeling great. Thanks for asking, Joe. I'm fine, really. Wow. Okay. All right. There is one here, but it didn't trigger, so I'm not going to show you that one. I want one that actually triggers and goes. So let's see if we can find one of those for you. Another one that didn't trigger. Unfortunately, they often do not trigger, which is kind of annoying, but it's just the way it works. Wow, what a mess. Maybe we'll use sorry, Tico, maybe we'll use Mock's Aussie Yen suggestion instead. because, like I said, it's kind of rare. And I'm going to go and see if I can find one here, okay? One of the reasons why I do this is so that you guys know that I'm not, like cherry picking perfect examples or whatever. I want to be able to show you this kind of stuff on all the charts. Maybe we will find one on the up. No. I was thinking that maybe there'd be one. No. Oh, still no. I'm looking for biceps, but maybe there are some cell setups that I'm missing out on. No. And no. Ah, there's one. Actually, this is a... Yeah, it's okay. All right, we're going to use this one. Okay. Now, I'm going to adjust this chart so that it's a little bit, so that it's a bit better in terms of what it shows in terms of the. Okay, there we go. Far right edge. Okay, so this is what we're talking about, guys. Is it's an inside candle formation. Now, when I first started trading in, getting into the patterns and stuff like that, one of the things you learn about is inside candles. And there's an old book, I forget the guy's name, maybe someone here knows, but I mean, it's a really old book about inside candles, and he gets really into it. But what I found in my testing was I couldn't really make inside candles work. And part of the reason why was it wasn't a clear pattern in terms of whether it was going to be a breakout, like we talked about. In other words, does the inside candle mean the market's going to break through a level, or does it mean it's going to reverse? And the answer is it depends. And so it took years for me to kind of formulate a plan for dealing with these. So typically what I do is I assume the market's going to continue on in the direction it's been trending, assuming that you're in a strong trend. Now, in this example here, we don't have a strong trend, so I should point that out. We have a ranging market. This big red candle that I have identified here with the red arrow is what I would call the mother candle. This is the big, fat, giant mother. And then the little tiny blue candle right here that has the blue arrow is the inside candle. So all an inside candle is by definition, it's a candle that has a higher low and a lower high than the previous candle. So it actually sits inside the mother candle like a baby sits inside a pregnant mother. Okay? Pavan says, inside candles are good for rule-based targets. Yeah, you can definitely use them for rule-based targets. If you're talking about Pavan, you're talking about you can do stuff like that. You can do ATR based or range based or something like that. Yeah. You don't have to go for zones like I typically do. You could even use a trailing exit if you want. Now, so those of you that follow my trades, you know about the system called the 2E system, which isn't really a purely naked system, but it uses inside candles. Now, the 2E system, for those of you who don't know what it is, it doesn't really matter. Essentially, I'm actually doing a webinar with one of my students on this tonight, and he's a really good inside candle trader. He uses the 2E system. He's going to show everyone how he does it later on. But the important thing to note is that the 2E system assumes that an inside candle is just a trend continuation signal. In other words, if the market's reached a zone, it's going to break through that zone. What I'm going to show you right now is instead a different way of looking at it, and instead what we're talking about is a trend, a reversal. So you're picking highs and lows using this setup. So first thing you need is a mother candle. Now ideally your mother candle is not going to be a giant candle like this one. Ideally it's going to be average or maybe slightly above average in range. So right away this one that's identified with the red arrow is not really ideal, but we're going to use it as an example anyway. The blue candle here marked with the blue arrow is the inside candle. And then we get one more candle here, which basically makes this pattern work. And this is what we call the pogo. Pogo being it's a candle where the market fakes like it's going to continue onward and continue in the direction it's been going, which is namely down in this case, right? but it snaps back up because the wick forces all of the orders that were done. So a lot of the trend followers and breakout traders and those guys, they had their orders sitting down inside candle, right? And if you traded inside candles, you know exactly what I'm talking about. This is where people put their orders. So what happens with the pogo is the market goes low enough to get those orders and then snaps right back up. And so what you do in this case is you actually put your order here above the high of the inside candle. This is a buy trade. So everyone else is selling, and as soon as we see the pogo, we go, okay, we're gonna go long here. Now, the stop loss obviously goes down below the low of the pogo in this case, this is a bullish pogo. You don't have to have a perfect kangaroo tail looking pogo like we do here, okay? That's not necessary. What is necessary is that your pogo makes the lowest low of the three candles being the mother, the inside candle, and the pogo. The pogo is always going to have the lowest low when it's a bullish pogo setup. I'll state that in a different way. When you find a bullish pogo setup, you will always put your stop loss below the low of the pogo because that's going to be the lowest candle. The candle has the lowest low. All right? Never will you put the stop loss below the mother candle, and never will you put the stop loss below the inside candle. The reason why is the pogo is that candle that's made that lowest low, right? So it's the candle that cleared out all those orders and yada, yada, yada. Okay. So now what happens here with the green, this little thing right here, this is my buy order. Now it goes above the inside candle, which in this case is the higher high. You might ask yourself or ask me, say, Walter, what if the pogo actually has a higher high in this case than the inside candle? Sometimes that does happen, and sometimes then you would put the order above the inside candle. I like to use 6 pips for, daily and 4-hour charts. I think that's good enough. Maybe for a weekly chart, you might do 8, 9, 10 pips, but basically I just want the market to go. I mean, I add the spread, obviously. With the buy trade, you also add the spread, right? But, I just want to make sure the candle does, in fact, make a new high here before I get triggered in. So this is an example of what we would call a bullish pogo trade. Now, it doesn't necessarily have to be on support or resistance. You'll notice that I've got support down here and resistance up there, and we're actually in no man's land between the two. So it's not necessary. In fact, when you're doing a trend continuation setup with the 2E system, which is of course an inside candle system, you're actually hoping that you're not on support or resistance, and that you're kind of in no man's land because you're expecting the market to continue onward in the direction that it's going, which is typically a very strong trending direction. Up or down, doesn't matter. So in this case, you've got a directionless market. We're not even on support or resistance. And so we go, okay, well, the market's cleared out all those orders, and we put a buy order above the high here, and you can see what happens is not the next candle, but the next one probably takes out that order, and the market marches up to the zone up here. So it went up all the way up to this zone right there. So that's an example of a bullish pogo trade. Now I'm going to open it up to questions. Go ahead, and if you have anything, I'm going to take a sip of tea. Let me know if anything I said is confusing or counterintuitive or not clear or whatever, and I'll see if I can pull up another example for you from a bearish point of view, like a bearish pogo, which again is going to be a situation where, the market looks like it's going to keep going higher, but the pogo prints and tells you that, nope, it's time to sell. All right, would you have taken profit at the resistance level? Yep, that's what I usually do, Ian. Yep. Please show more examples. Looks like a chair, says Tigo. Excuse me. Still got the sickness. Okay, let's keep going then. Let's see if I can find some examples, and potentially a bearish example, which would be just lovely. Remember what you need. It's really tricky because you need 3 separate candles to actually all sort of do their thing. Otherwise, you don't have that trade, right? So all these things have to line up for you. Any other questions, just pop them in the chat, and I'll get to it. All right, here's an example, guys. Let me show you this. So what you have right here is here's your mother candle, right, with the blue arrow. That's your mother candle. There's your inside candle right there with the, I'll go ahead and go red on that one. Okay, so if you're looking at this, you look at this and you go, oh, look, we're going to get one, right? We got the mother candle, we got the inside candle, it's got a lower or higher low and a lower high, but then you don't get the spike up on the next candle to clear out all these orders up here. So you can't, like, this is not a pogo, right? Yes, it has a wick. Yes, it has about an equal high of the inside candle, but it didn't go high enough. I mean, for me to take a trade here as a pogo trade, I'd actually even want it to be higher than this candle here. And we haven't talked about this, but typically when you're taking these at extreme highs or lows, swing points or potential swing points in the market, your mother candle is typically going to be that swing candle. In this case, the candle before the mother candle was. So I would definitely want my pogo candle to clear out this high. In other words, I would want the wick of my pogo candle should definitely go beyond this high right here. The other thing I didn't mention, I failed to mention, is when you have your pogo candle, you want it to close back inside of the inside candle, right? So this one actually closes outside of the inside candle because it closed so bearish. So for multiple reasons, that's not a good setup. Let me see if I can find a good setup for you. There's one. Hey, look at that. Hey, perfect. This is a beauty, actually. So let's take a look at this one. Let me show you kind of all the rules here. So number one is this is the mother candle. Remember I was talking just a moment ago about how you want your mother candle to kind of be the swing high? Well, we've got the highest high. It's higher than this high, and this high. So this is a really good swing point. Okay, so that's number one. You got your mother candle. And it really doesn't matter what it looks like. Like I said before, the main thing you want is you don't want your mother candle to look like this big blue candle. You don't want it to be like a giant candle, because that makes it too easy for the inside candle to be an inside candle. Now this is your inside candle right here, which I'm going to mark with a blue arrow, okay, right here. And so what do we want to happen here? What's the next thing that we need to create a pogo trade? What do we need? Yeah, we need a pogo, man. Exactly, Tico. You got it. So what we have is a boing. There it is right there. So the market clears out all of these orders that were above the swing high here. So my stop loss goes above the wick of this candle. Now again, does this have to be a kangaroo tail looking candle? No, it doesn't, but it's got to have some sort of wick on it, because otherwise it won't be able to get back inside of and close inside of your inside candle, right? So my stop loss goes on the other side of my wicky pogo, and then my sell order goes below where? Where does my sell order go, guys? I'm just going to check and see if you're paying attention. And it also gives me an excuse to take another sip of tea. So let me know where my order is. Where's my sell order going to go? Yeah, it goes below. Below the inside candle low, Gabriel. Bingo, you got it, buddy. Of course you know. Of course you know, Gabriel. So that's it. So we're going to put the sell order below this blue candle marked with the blue arrow, which is right here. It's a little, I'm going to make it a little green. actually, I'll make it blue. This little blue box right there. I know it's red, but whoops. I didn't want to give you the sneak peek of the future there. Okay, so there's my blue entry order right there, and you can see, bam, the market does in fact trigger it on the next candle, and then it falls all the way down to the next zone down here, and it even goes even further than that. But that, that's not really that critical. Now, let me point out this little situation over here, and let me ask you something. Notice what we have over here. We have a candle right here that I've marked with the red arrow. Okay, and then we have another candle right here that I've marked with the blue arrow. Now, if you think about it, this little wiki candle that's kind of sort of a neutral candle has a higher high than the next candle marked with the blue arrow, and it has a lower low. So we actually have an inside candle here, don't we? This candle is inside of the mother candle that's marked with red. So the candle marked with the red arrow is the mother candle, and the candle marked with the blue arrow is the inside candle. So all we need is a pogo, right? And guess what? We get one, right? What do you have to say about this candle that printed after the inside candle? What do you say about that? What say you, sir, about that? Yep, exactly, Ian. Ian gets the award for the day, which is it hasn't closed back inside the candle. Exactly. So this blue candle here that prints after the inside candle marked with the blue arrow is not a pogo candle. And the reason I'm showing you this is I want to show you an example of one that did not fit the rules. It didn't fit the criteria because the open and the close did not happen back up inside the inside candle, so we can't take this trade. Now what you'll notice is it actually resets, because then what happens is that blue candle becomes a mother candle, and then we get an inside candle right after. But what happens next? The following candle is not a pogo candle, right? It is not. So again, it's a no trade. So in both instances, you were ready for a possible pogo, but you didn't get it. And it's kind of a good thing, isn't it? Because the market ended up falling down. So here's another one here where you have a mother candle right here, right? Here's your inside candle right here. But again, the next candle did not print a pogo. And this brings up an important point. It is a 3-candle formation. It's kind of tricky. I kind of vacillated whether or not to talk about it at this webinar because there is so much involved and there's a whole bunch of things you need to know, but I just wanted to give you kind of an overview. This red candle marked with the red arrow is the mother candle. This candle marked with the blue arrow is the inside candle, and the next candle is not a pogo because it didn't take out the low, blah, 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 blah. Now let's get to Tafita says, what is the inside or mother candle? Okay. Quick definition, Tafita, you may have come in late. The mother candle is the candle that has the higher high and the lower low. The inside candle, by definition, is inside of the mother as a baby is inside a pregnant woman, right? So the inside candle, by definition, always has a lower high and always has a higher low, right? So there you go. And then the difference here, now this gets actually to Gabriel's question, which is a really good one, which Gabriel says, I didn't forget about your question, Gabriel. It doesn't necessarily have to go in the favor of with the trend, right? And that is a bingo, a big fat bingo. Yes, yes, yes. The reason why that is correct, that it doesn't have to go in the direction of the trend, Gabriel, is, excuse me, is because typically this is in fact what you would call a reversal setup. So if you're trading, for example, the 2E system, Gabriel,
the 2E system would be an inside candle formation that is an example of the market continuing with a trend. It's a trend continuation setup, right? Whereas the pogo is a reversal. So where the 2E traders and the trend traders get stopped out, the pogo traders make money, and vice versa, right? So where the pogo traders get stopped out and don't make money, the 2E traders collect their profits. Not 100%, but that's in general kind of what you see happening most of the time. So does that make sense? Yeah, so it's really what it is. I guess another way to look at it, Gabriel, is you could say a pogo is a busted 2E trade. You know what I mean? Like it's a 2E trade went bad sort of thing. That's how I would kind of explain it. So, yeah. Okay, cool. All right, so just kind of checking the time here. Looks like we're about halfway through or a little bit past halfway through. So just wanted to show you this. It's really a great way to see false sort of trend continuations. Important points here are, I'll just write them up on here for you. Important point number one, the 3 candle formation. So that's why they're kind of, and all the candles have a job to do. They all have to do the right thing or it's a no trade. You get mother candle, inside candle, and then pogo, in that order. It's always in that order, right? Mother candle first, inside candle second, pogo. Your stop is always on the other side of the pogo. Stop on other, when I say other, I mean the other direction. The other side of the pogo. And your entry is going to be on your inside candle. Okay? Unless the pogo has a higher high or a lower low, right? But in most cases, it should really be your inside candle that defines the entry. And now you can use any sort of exit strategy you want. You can use an X number of pips, blah, blah, blah. You can use zones. You can use trailing exits, all of that stuff. I don't really want to talk about that because that's really more to do with your personality as a trader. But I want to talk about finding these things, and that's really the important thing here, okay? So hopefully that makes sense, guys. All right, cool. Isn't 4-hour candle Prit says, is this pattern good on the 60-minute? Yeah, look, you're going to find this on, like, across the board, right? So it doesn't, like most naked strategies, you might typically see a higher win rate with the higher time frames, but you will see it applicable to all. So, for example, I like to trade belts on the 4-hour and the daily charts, but there are a lot of traders I know who like to trade belts on the 1-hour, and that's fine. You might get a better reward to risk ratio, and you might get a lower win rate, but you get more trades, right? So, if you feel like you have to be doing something, it's good for you. But yeah, so, and by the way, you guys, don't take my word for it. Test this stuff, have a look, see how it works for you, see how you can adjust the exit and change the profitability of the system. All this stuff is really critical. Milan, this is a question that comes up a lot when you're talking about price action trading, naked trading. One second, I'm going to take a sip of my tea. It's not problematic that the 4-hour candles close differently depending on the broker, just as it's not problematic that the daily candles close differently depending on the broker. It typically means that some of you will get trades when others won't. I like the 5 p.m. New York close broker. I like to use those charts. Some people like the midnight GMT broker. So it just depends on what you like. And so you'll miss some trades that the other traders will get and vice versa, but it's not really an issue because really what we're talking about here is the flow of the market. and that comes through in the wicks and the closes. So that's what we're talking about. What we're talking about here is a false breakout. That's all it is, right? The pogo is simply a false breakout. It's an example of the market moving in one direction, pausing with an inside candle, acting like it's going to continue onward, and then just totally reversing. I just wanted to point out there's actually two more interesting setups here that I'd like to show you. Here is an inside candle right here, and here is a mother candle right here. So the mother candle I'm going to make red, right? And the inside candle I've got the blue arrow. But notice what happened. The next candle is not a pogo. Why is it not a pogo? Why is this candle right here that I'm going to mark with the red line, why is that candle not a pogo? Why isn't that a pogo? I'll put it to the far right. This is what it would look like, you know, when the chart was unfolding. Yeah, Abdul nails it. It doesn't close back inside the inside candle. So it went up, it cleared out all the orders, right? It even went above this high, which is brilliant. It went above this high, that high, and the recent high. So there's a lot to like about this, but the problem is it didn't come back and close inside of the inside candle, and the reason, that's why we don't take the trade, and that's exactly what happens here. The market keeps going higher. So by having that rule that the market must come back and close inside the inside candle with your pogo candle, that's telling you that momentum has fizzled out. If the candle does not come back and close inside of the inside candle's range, you know that the momentum has still strong and is likely to continue onward as it did here. Now, there's another example I'd like to show you right here. Actually, I'm going to go like this. So, yeah, it's right here. Here's another one. So here you have your mother candle, which I've marked with red. I'm going to put a blue arrow on your inside candle, which is this one right here. Oops. That's blue. And then, of course, the next candle we get is not a pogo. Why? Same reason, but in reverse. This next candle right here is not a pogo because it does not come back up and close inside of the inside candle. The open is inside the inside candle, but the close is not, right? So this red candle is not a pogo, and there is no reason to buy here. You can see the market, of course, continues lower. All right? Just wanted to point that out. There is another one in the middle at the top of the trend before the reversal. Yeah. Right here. I guess you might be talking about there's an inside candle here, and there's also an inside candle here, but obviously, you know, as you say, in both cases, you didn't get a pogo on your third candle. So that's why I say this is kind of a rare situation. Yeah. Yeah, so Tico's pointing out the ones up here, and the market does reverse here, but because it doesn't fit the pogo rules, I don't get an opportunity to get in. So, and remember, there's a lot of traders that see inside candles as trend continuation. Namely, you know, for example, my friends that trade the 2E system and do quite well at it, they just know they're going to get stopped out in this instance. It just happens. They get stopped out quite a bit, but because they're trend traders, they also make huge money on their winners, so it doesn't really matter for them. All right, so like what I'd like to do now is go ahead. You guys post your questions for particular charts. I'm happy to go into those. Right now, I'm going to quickly go over the trades that I'm in. My weekly New Zealand dollar trade hit target 1 and target 2. That one is now over. That trade is done and dusted. Okay. The pound trade hit. Oh, cool. We did hit target 2. Okay, cool. That just happened, I think. The pound trade was sold at 57. It hit 55, which is target 1, and it just now hit target 2 at 53.80, and I'm waiting for target 3 at 52.60. Stop loss is at 56.90 or plus 10 pips. So those are the two trades I've had recently, the pound one and the Kiwi one. right, which is done. Again, this was a sell at 70.18. And whenever you see my charts, you'll know immediately that the blue color is the entry price, the red is the stop loss. Obviously, the stop loss didn't start out at plus 8 pips, right? It was actually up here. It was up much higher, but I moved it to break even, or plus 8 pips to, to guard against a retracement, basically. The trades that have just triggered now are my Aussie Swiss, which is a sell at 70.14. It's kind of right around, 20 pips away from where it entered. I'm looking at a 69.30 target and a 68 even target. There's an alternative stop at 71.20 or a stop at 72.12 on that one. So that one's kind of just where it started. The Aussie Kiwi, I think we kind of touched on this one. Stop loss at 114.30, entering at 111.25. So it's like, 50 pips. It's in 50, 60 pips of profit. Waiting for 108.50 and 105.70 as my targets. The Euro Aussie also has broken out and gone up, 40 pips from the 1.4817 buy entry. Stop loss at 43.15, targeting 1.5170 and 1.5450. And the New Zealand CAD, I'm not in a trade on this one, but I'm kind of watching it, and I'm waiting for the market to come up and tag this green spot here where the lows are over here. And if it prints a bearish candle there, I'd be pretty hot keen on a sell. I'd also like to sell the Aussie 4-hour if it gets up here and prints a candle that sort of shows exhaustion. Those of you that follow my trades know I've been really, really excited about selling silver, and then yesterday the floodgates opened up without me. It's such a bummer. It's kind of like, when you think of all the bad things that can happen to you as a trader psychologically, the worst one is missing out on a trade that you really wanted to take, clearly. And if you go to my redirects page, it'll just redirect you to see where people are at in terms of the retail traders at Owanda, and you can see how many people are long. One of the reasons why I wanted to take this trade is so many of the traders, 85% plus of the traders, were going long silver, so I knew it was time to short it. And that's exactly what happened here. So now I'm kind of waiting for a retracement because the candle yesterday already went down to my first target. So it almost actually even would have hit my second target, but it didn't. So that's kind of a bummer. Gold is also kind of in a similar situation, but it hasn't done the break yet. This is what I call a squeeze play, where you get the horizontal level holding the price action, and then the trend line is squeezing it into that horizontal level. It usually pops out to the flat side, which would be down for gold. Interesting that silver's done the big move and gold has not. Very interesting to me. Do you use different accounts for daily trades and weekly trades? No, not anymore, Ian. No. Yeah, Pan's kind of saying, it's a shame about silver that it went. Wonder why with silver, because pip's not that much. Some brokers actually charge you quite a bit of margin for silver. Some traders don't even trade it because gold's easier to trade. So it depends. So that's it. Are there any charts anyone wants to take a look at, or should we just shut it down? Okay, Abdul, Aussie and daily. Okay, let's go. Whoa, wow, that's pretty cool, Abdul. You're thinking of a short, are you? Okay. So here's how I would do this. I'd be thinking breakout / Acapulco, Abdul. And if you were to get a really low close today, like say around, less than 90, so 89, 95 or something, 89, 72 or something like that. That would be good. And then you might get a diver candle tomorrow. You know what I mean? That could be pretty cool. May we hear your opinion about the Swissy 4-hour? My line is already drawn. Yeah, I think you're onto something, Abdul. If you're thinking of a short, I think you're onto something. I would rather sell the Aussie, I have to admit, but the Aussie yen looking like it could give us a daily setup there. May we hear your opinion about the Swissy 4-hour? Sure. Okay, so the Swissy 4-hour is Okay, well, this was a big consolidation box I had drawn here. The market had gone back in the box, touched it. I'm guessing that this is going to be some sort of divergence. If I threw an indicator on here, which I don't necessarily want to do, but yeah, you have a higher high here, which is a lower high on the peak on the indicator, lower high on price, and a higher high on the indicator. So this is an example of one of those divergent double tops or whatever. I don't know if I'd really trade it though, because when you're falling down here, you're going to get stuck here, and then you're going to get stuck here, and then you're going to get stuck here. It's just, it's too bad you can't have just a straight shot to here, because that would be 160 pips. I feel like this could be a really bouncy ride, so I probably would, to me, I would stay away from it. But I can see if that's what you're thinking, I can see definitely, that might work out. It's just, how far do you have to retrace before you get there? Yeah. June 27th, Mother Candle. Camille, which one are you talking about? Which chart? Aussie yen. Okay, cool. June 27th. June 26th? Yeah, right. So that's June 30th or whatever. Yeah. Yeah. So there you go. That's actually that's a this is a really interesting one, because it's a bearish. Does everyone see this? This is actually a pogo, but it's not really in a good spot for a pogo. See? So okay. So let's just qualify all the candles and mark them all. So here's your mother candle, right? So I think we were using red for that one, right? There's your mother candle right there. So that's the one with the red. And then there's your inside and there's your inside candle right there, which is the little tiny one right there. Right? So that's blue. And then you get your pogo. Now the problem with this one, from my view on this one, is that you've got a it's not. Ideally, we would have seen the market go up a little bit before printing this pattern, but it's actually going down. So it's sort of like a trendy pogo, and the pogo candle itself is sort of pulling away from these lows over here, right? All these lows which are providing minor support level here, but it certainly does fit the bill. It's just not a I would typically want to see this pattern at more of a swing high level rather than in the middle of the market moving. So now, typically, what you'd be looking for down here as the market moves down is a bullish pogo. So the opposite of this, actually, that would have been to me a better setup. But whatever, it would have worked out for sure. Cool. No worries, Camille. I hope this really was recorded. Yep, I think it is, Saeed. All right, thanks, guys. I think that's it. Hey. Yep. Okay. Cool. Thanks so much for your time. I hope you have a wonderful trading week. Go ahead and test those pogos. I hope you have fun. Let me know how you go, and we'll see you soon.